On behalf of Crosscheck Media and Biz Talk Today TV, welcome everyone to BTT's special report on the February jobs report. My name is Todd Schoenberger, and I am joined by José Torres. He is the senior economist at Interactive Brokers. Jose, good morning. We have the jobs report that's going to be released in a few minutes. Can you tell the audience what expectations are looking like right now?
Absolutely, Todd. Great to be here. 65,000 headline unemployment rate expected to remain unchanged at 4.3%. Headline payroll growth 65,000. That's about half of what January was. I think we're positioned here for a beat. That bar is particularly low. What we've seen in the past reports in the past few years post-pandemic is that job gains tend to be revised down later. So the initial prints oftentimes are big beats. So I'm expecting a number around 90,000.
90,000. Well, I have heard that the number's ranging between 50 to 70. It's been that way all week. However, it seems to be a coin flip at this point. Everyone is waiting to see what we're going to receive, only because there's so much other instability factors that are taking place, namely the Iran war right now. So are you, let's say, hypothetically speaking, the report comes out in a couple of minutes, and it's negative. It's quite bad. It's actually showing instability in the labor market. And now we have to also adjust for the fact that we probably are going to have hotter inflation over the next couple of months as a result of the war. That stagflation period, is that a draw of concern for you?
You know, Todd, very interesting point. That actually might be market positive on a day like today, because we've had what's sending yields north this week has been, of course, the climb in oil prices stemming from the Iran war, but also economic data has been off the hook this week. ISM services, manufacturing, unemployment claims, ADP jobs, Challenger, everything better than expectations, Todd. So it's been the oil prices, but it's also been the robust economic data. So if you get a little bit of alleviation in the economic data, right, and then the Fed can say, okay, maybe we do need to cut, even though we have a temporary increase in inflation due to oil prices. So, you know, that's an interesting dynamic. And I think that can actually draw bids into the cyclically oriented rate sensitive areas of the market, particularly the Dow Jones and the Russell 2000. They've especially struggled these past few days due to the war because they depend on rate cuts to climb. So if you get a weaker figure here, you might actually get a good reaction in the market. Too strong data and the oil price is higher, you know, it's just yields would the 10-year could go to 430, 440. That would not be good for stocks.
You're right. You probably will see a positive pop in the markets, but for Main Street, the overall economy, it will not bode well, especially at that household financial level. So we'll have to wait and see what this number's coming out. We actually are coming out in about a minute now on this. We are live, everyone, with BTT's special report. I have José Torres. He is a senior economist from Interactive Brokers. He's going to break down, give us instant analysis on the February jobs report. So you definitely are at the right place right now. So I am worried about this war right now. It actually is I think Americans were a bit optimistic, thinking that this thing was going to end quickly. And now it seems like it's just going to be a prolonged mess. And that concerns me, because I'm going to think that will have a dire implications for the overall economy, but we will have to wait and see. Okay, so now we're at 8:30. I know we're waiting any second now for those numbers to come in. Jose, do you have
90,000? Sorry, Todd. We're live, folks. 92,000 jobs added in February. Unemployment rate changes, upticks to 4.4%. So better than expected number. Let's see what the market reaction is.
92,000. That's incredible.
Yields are now down a little bit.
Okay.
The S&P is extending its losses a little bit. This is a stronger than expected number, but it's mixed because the unemployment rate going up, that could fuel Fed rate optimism, Fed rate cut optimism. In fact, we're seeing that right now. The 2-year is down 5 basis points to 354. It's falling faster than the 10-year. So that's a bull steepening across the yield curve. So Fed cut expectations are being bolstered by today's report. So far, it's still early, but because the unemployment rate is ticking up, that does incrementally strengthen the argument of the doves, which have been worried about labor market weakness and are willing to accept above target inflation for some time to spare the labor market. Retail sales also came out. That's a number from January. That's
Yeah. What do
down
you have on the retail sales number?
Down 0.2% month over month. But the control group is up 0.3%. That's the number that matters more for the GDP calculation. So we'll be diving into both of the reports right now, actually.
Do you have, on the employment side, do you have any revisions yet?
Yes. Let me get to that in a second.
Yeah, because I think at 92,000, and while you're looking that up, I'll editorialize here. So clearly is much obviously a hotter number, a larger number than what Wall Street analysts were expecting. Even the whisper number was well below the 92,000. So this should bode well, at least from the Main Street level, for the economy. What the Fed does, monetary policy. Also, you have this Iranian war. I mean, there's a lot happening right now. Jose, in your opinion, do you think right now, today, at this moment, what's taking place in Iran is taking precedence over that 92,000 print?
100%, absolutely. Let me tell you why, Todd. January's inflation, 2.4%.
Wow.
February is probably going to come in at 2.4% as well. But March, real-time indicators, I track it daily based on inputs. Of course, gasoline and crude oil are pivotal for that number. We're looking at 2.9%, folks, ladies and gentlemen, for March. So this is a number that's going to be released in April. So if this war doesn't end soon, because what you need for oil to make a material impact to the CPI, you need it to spike and then stay there. And that's what we're seeing. We've seen it get up to 73, 77, 80, 86. So it's getting up there. It's staying up there. That's really bad for inflation figures going forward. So it's top of mind. To get back to your earlier question, folks, we're covering a lot of topics here. The revisions, December was down 65,000. So that went from a plus 48,000 to down 17,000. So big downward revision. However, January was very muted, only down 4,000. That got revised from 130 down to 126. So far, Todd, like you said, for Main Street, not bad. 126 for January, 92 for February. So not bad numbers for Main Street.
Not bad at all. So how are we looking in the futures market, though? I mean, what are we anticipating? Stocks open up at 9:30 this morning Eastern time, and we were already lower going into the report released at 8:30. I'm curious as to see where we're going to stand as far as going through the day, especially with those higher oil prices that you just mentioned.
Yeah, the VIX is up to 27.6.
Wow.
That is very high.
That's concerning.
Futures, yes, very concerning. But also, these are times, Todd, where, if you want to be a bull, it's not a terrible time to be a bull when the VIX is high, because that's a lot of fear in the market, a lot of folks hedged up, and you have some terrific snapback rallies. Right now, this year, 6,800 on the S&P has been pivotal. The bulls have not wanted to give that up. The bears have tried. We've gotten below that, but the bulls intraday, this week has been crazy from a stock market perspective, Todd, because we never close near the lows. We always make this crazy recovery back. Right now, the S&P is going to likely open below 6,800, but maybe not. It's already recovering. Right now, it's looking like 67.90 on the S&P.
Well, I think that helps, though, because wouldn't you agree? I mean, every time we've ever seen periods of stagflation, the Fed has always had to focus on the inflation reading, not the job growth. So now that you have an optimistic report, a print of 92,000, that does give the feeling that, okay, the stagflation argument can be put on the shelf right now. That at least helps the Fed concentrate on current monetary policy that's trying to continue to create job growth. Let's make sure the economy comes in for a soft landing. Wouldn't you agree to that?
Yes, and give me 1 second, Todd. Hold on. Just
no problem,
second.
Jose. Jose is hot. I tell you, he's like Adam Schefter on Wall Street. He's got phones going on. He's getting alerts from everybody. This is inside baseball for everyone out there, and this is what BTT is bringing you today on these reports. I am a bit when I see what's taking place though in Washington, it's just too much uncertainty at this point. And this is what happens when you have, and you know where I lean politically, but when you have everyone, when you're out there and you're putting your face out there and you're yelling and screaming and you're saying this and that on policy issues, no matter what it is, you put yourself out there and the risk is just so high. The margin is so wide that you can flop down real quick. And I think that's what we're seeing right now. And I think what's taking place inside the Beltway is causing concern for investors this week. So a lot of concerns. At least I'm concerned, that's for sure.
Todd, and I have to concern you about one other thing. I made a mistake. Lost 92,000. It wasn't plus 92. It was minus 92. That's why yields are falling fast. Fed cuts are getting stronger. Sorry, folks, I misread. I was expecting 90. So when I saw 92, I was like, oh, I'm right again. But no, I'm wrong. And I've been reporting wrong for the last 5 minutes. So I apologize. We're down.
No, this makes a lot of sense, though, Jose. It's not your fault. I mean, there's a lot of data that's coming in all at one time. So minus 92,000, breaking right now, minus 92,000 on the jobs report for February. This now goes back to everything we were just talking about: stagflation issues, higher inflation, low job growth. This is a period that sucks right now, Jose. Stocks should be selling off. What do you think?
Yeah, I mean, let's go to the sector perspective real quick. Yeah, I do think that private education and health services, that's been carrying the job market all year. That lost around 33,000 jobs. Leisure and hospitality lost around 27. Information lost 12. Government lost 5. Transportation and warehousing lost 12. Manufacturing lost 13. Construction lost about 11. Mining lost 5. For the additions, retail trade added 5, wholesale trade added around 6, financial activities added 10, and other services added 8. So really weak from a sector breadth perspective. Yeah, very
what
weak
sucks
report.
About the number, the one that sticks out to me, construction, a loss of jobs in construction. Historically, we go into the hottest housing season is always the spring, because families, they like to relocate at the end of the school year. They got to enroll their kids into another school. So this is the hottest period. And that's usually when you start seeing construction of housing that's taking place. To see a loss in that area is deeply concerning, because that says to me that because of the higher rates, even though we dipped below 6% 2 weeks ago for mortgage rates, you still have a concern that there is zero demand right now on the real estate side, at least on the residential housing. That's a concern right now. What do you think, Jose? I mean, is that a proxy for maybe a really a tough period going into the second quarter?
We'll see. A big deal has been the closed border policies. Those folks, they come in, they rent houses, they bolster rent prices, they buy homes, particularly entry-level homes. So not having them here does weigh on the residential market from a transaction and a price perspective, but that's also a benefit for those folks that are looking for lower prices. So we have been seeing decelerating prices, but not that much incentive, Todd, to your point, to construct, to build much more, because there's really no buyer on the other side, Todd, and that's been a weak point for the real estate sector for sure.
So let's follow up on that then. Are you saying, if I understand you correctly, because of the closed border policy and the loss of jobs from those that did cross the border that were working in construction, are those numbers, the loss of those jobs, is that part of that minus 11,000?
I definitely think so, because it's a labor supply issue. Also, leisure and hospitality, big loss as well, Todd, and that's also a critical sector where a lot of those low skilled workers from from Latin America mostly, they work in that sector, leisure and hospitality, waiters, waitresses, cleaners, those kinds of jobs. So that was one of the biggest drags as well. Definitely a labor supply issue. You don't have as many immigrants to bring in to the workforce. But then you also have the demand side. You have rates that are still too high in real estate to do much, like we were saying. Manufacturing, same thing. Rates are too high. Investment is there, but jobs aren't there. And then small business, Todd, talking about Main Street. Small business, these SBA loans used to be 5%, 6%. Now they're 10 and 12%. So it's so hard for those small town entrepreneurs to go out there, secure some financing, and start doing stuff. So really, that's.
You're right. You're right. And on the leisure and hospitality, deeply concerning. Again, vacation time. What's up with those bratty college kids? Aren't they going on spring break anymore? I mean, this is incredible. These are numbers I see. We used to study this all the time on Wall Street, where we were talking about when you look at little things like that, when you look at the sale of women's dresses, you start looking at lipstick sales because the woman of the household tends to be the accountant of the household. Then you see these jobs like construction, leisure, and hospitality. These aren't banker jobs. These are jobs that actually help power the U.S. economy. So it's hard to, when you start seeing losses there, that is a draw for concern. I could see why stocks will be selling off even high. We are going to see an acceleration of selling going into this weekend only because of all the bullshit that's going on in Iran. I'm very concerned right now, Jose, as you could tell.
Yeah, no, and you should be. You should be. Absolutely. Because, it's really, even with a worse Fed, he can cut, the long end isn't going to cooperate. This is someone that in the past has really opposed balance sheet expansion. So sure, we can do what Japan does, right? We can own 50% of our own debt via the Fed, lower rates, buy the long end, and just, manipulate everything. But force comes in, gives President Trump a rate cut or two. The long end is going to remain high. President Trump hates that. He's a construction guy, old school real estate guy. He wants low mortgage rates. He wants, similar to President George W. Bush 43, he wants folks to be able to buy homes, the American dream, all that. So, it's really going to become complicated for the worst Fed as we get going. Already we have Governors Waller and Myron talking about not to worry about higher oil prices from the Iran conflict. Folks know my political views as well. And I tend to support, the GOP. I lean that way. However, you really got to worry about this. And I'll tell you why, Todd. Recent example. We had the Russia invade Ukraine. The Fed would not have had to cut 525 basis points had that not happened. They would have cut maybe 350, 400. Those banks, SVB, those other ones wouldn't have failed. We have private credit issues now. When you have some financial institutions, I used to work at the FDIC, folks, so I used to expert on financial institutions crumbling. When you have financial institutions that are on the brink, right, within the next week, they could either be in spectacular shape or they could cease to exist. When you have yields spiking, when they're in that precarious point, that is very, very risky because they have a lot of floating rate debt. They have to pay bills. We're already hearing about a few cockroaches, like Jamie Dimon says, lingering around the private credit space. So that is a big source of concern. Then the consumer's already been, doing all right, still powering the economy forward, but some issues about debt. And now with higher oil prices, they're going to have to pay more for airline tickets. Like you said, the spring break crowd, they're going to have to pay more to fly to New Orleans or Myrtle Beach or Miami or Baltimore, Maryland. Right?
Nobody goes to Baltimore for spring break. They should, but
yeah. So now the point is that they will have to they now have less money to spend on other things, right? If the airfare is 300 instead of 200, now you got that less, you got 100 less to spend on other goods and services. So that's how it weighs on growth and pushes up inflation, stagflation.
Right, and you're absolutely right. So you've been on the show many times. The Torres Report is your show. You said on the Torres Report last time that you still are anticipating 3 rate cuts. After seeing this report, along with the retail sales report and all the stuff that's going on in Iran, are you still sticking to that 3 rate cut scenario?
I'm going to go down to 2.
Okay.
Go down to 2.
That's breaking news, everyone.
Yeah, I think I'm going to go down to 2 because the Fed's going to cut to please the president. They have a weaker labor market argument to support that view. The but then the higher oil prices, Todd, and then inflation coming in at 2.8, 2.93%, that's going to be problematic. But we'll see, because the president and the administration, they're working on trying to alleviate the energy crisis that we're seeing at the moment. They're trying to bring out some more supplies, work with some other global counterparts. For example, they're letting India buy some Russian oil that's at sea. So they're bringing some supply on from Venezuela, refining that in Texas and other areas. So we'll see what happens with that. Also, the midterms are coming up. President Trump doesn't want a stock market sell-off and an oil price spike heading into the midterms. By the way, our Interactive Brokers prediction market, unfortunately, Todd, the Republicans are losing ground. Beginning of the year, it was almost 3/4 that they were going to keep a majority in the Senate. No one was talking about the Senate. Now we're down to 59%, Todd.
Yeah.
The House, the Democrats, they started the year pretty high, around 74. Now they're up to 82. And the governorship races right now, they're still early, but neck and neck. So, if President Trump wants to boost his approval heading into the midterms, it's important to try to control the oil price spike. Maybe take Havana. Okay, I'm half Cuban, so I really want us to go into Cuba and maybe make it the 51st state. Why not? It'd be great. A lot better than the Castro regime. And then, bolster stocks. You need the financial sector to do well, because that makes folks happy. Folks are looking at their investment portfolio. So I think those are key for the Republicans going into the midterms.
Well, that would help, but as well as I do, if we go into Cuba right now, the way the temperature is in this country, people will be going absolutely ballistic. And I think on both sides of the aisle, we'll have to wait and see. But you're absolutely right, Jose. I mean, the midterm election season just always brings uncertainty. This is just ramped up. This cannot, that we are on red right now after today's reports that just rolled out. What can we expect next week, Jose? Let's give everyone, we are still live on BTT. What can everyone expect next week from an economic standpoint?
Yeah, I think we're going to get the CPI, the PPI, but top of mind, everyone's going to be looking at oil prices and equity volatility, the VIX, and yields to see what's happening in Iran. Because all of a sudden, if you get a ceasefire, who knows how much longer they can hold on. President Trump, he always says that he's doing a lot better than we all think. But he did say yesterday that he thinks that, we're close to the end, where we're getting there. So hopefully, we get a ceasefire. It's going to be, a controversial ceasefire, because we know how things go with Iran. There's a ceasefire and there's another battle, and things just, they keep going. They kind of never end. Like Middle East tension has kind of always existed for thousands of years. I wonder why. Well, we won't get into that. But on another point, Todd, in Miami, the folks are very, very, I'm a resident of Boca Raton, a suburb of Miami. In Miami, the people are very, very enthusiastic. Of course, the number one home of the Cuban diaspora. A lot of folks watch Scarface, and folks coming on on boats, right?
Yeah.
The Cubans are there, and they're extremely enthusiastic. President Trump had a group of Miamians and soccer team at the White House yesterday talking about that. So a little personal here, Todd, but yeah, we would like to see Havana. Why not? We're going to fly to Havana. We're going to do a show from there.
Oh, my goodness. I would love that. I know the audience will love it, too. We'd be on location in Havana smoking cigars. I love that idea so much. And we will have to put that in the game plan. I want to leave you with this one thing, though, on the Iranian war, just to bring it back. The thing that bothers me, and I think most Americans, is the succession plan of who is taking over in Iran. And the president said something interesting a few days ago, when he said we had people in mind, but then they were killed. The Israelis killed them. So if there was somebody that was in mind, why is our ally, the Israelis, why are they killing the guy that we had in mind to take over? So in other words, who's left? I mean, the son, they already said they don't want him. So this is an issue that is deeply concerning. And I think that's why Wall Street is just, we're really clutching our pearls at this point.
Yeah, a lot of it it could be accidents too. These missiles are coming from all over the place.
Yeah.
So, who knows if the Israelis did it on purpose and did it by accident. I don't really, hopefully we can find the right person. I don't really have much more insight to provide on the topic. Or we can bring someone from the States, just bring someone from the States and just fly him over there and have him run around.
There you go. I know. I might send in my application. That's right. We'll get things started.
Definitely not
right.
you. Definitely
not
you.
me. No, I don't think I would be welcome there. Anyway, listen, Jose, this was great. I know the audience gets a lot out of it. There's a reason why you have your own show on BTT. You are an expert, and you can just come up immediately with instant answers and instant economic analysis. So I want to thank you for joining me this morning on this very special jobs report day.
Absolutely. It was a pleasure. And ladies and gentlemen, my apologies for the plus 92. It was minus 92. Love being here with Todd. Love engaging with you all. And have a great day. And hopefully the markets come back. Let's see what happens.
Absolutely. So that's absolutely correct, Jose. And don't worry about the mix up on the number. We're all human. Things happen. So it's all good. So listen, on behalf of Jose Torres, I am Todd Schoenberger. Thank you once again for joining us on this special report from BTT on Jobs Day. Coming up at 12 o'clock live on WaveWire. We have the executives from Wave Capital that are going to further dissect this number that came out along with retail sales. And then they can also break in to really discussing what's going on with AI and if everything is happening, how that's going to play out for that sector. So until then, take care.